Let's connect with Anuj Kathuria, who's the president JK Tyres, to discuss their quarterly performance. And thank you so much for taking time out. There has been a margin expansion due to the raw material cost benefit, but at the same time, there are players in your industry that are indicating that the benefit could be rolled back in Q1 FY24. What's your outlook?
Yeah, so when we are talking about Q4 in specific, we on a consolidated basis, we had a overall revenue of 3,645 crores, which is an increase of 10% over the corresponding quarter. And the margins also had increased by almost 360 basis points. So this has been a good quarter for us. And this has been possible both backed up by the overall better realization. The net sales realization was better. And also the raw material prices had seen a kind of a softening. We expect that going forward, the raw material prices should remain stable. We have seen a lot of volatility in the last 2 years, but then in the last 2 quarters, especially Q3 and Q4 of last year, the raw material prices were quite stable. And we expect that the trend should continue going forward. On the NSR side, yes, there can be a little bit of pressure, but as of now, when the demand is holding up, the demand being buoyant, I think so the pricing also will hold true.
Sure. So you're saying that demand is resilient and raw material costs are expected to be stable. Then how much more headroom for margins do you see from here on?
See, for the year as a whole, our margins were at around 9%, 9.1% to be specific. So there is Q4 was definitely better. But we have, throughout the year, when we go from one quarter to the other, there is an element of seasonality. So quarter-wise, the demand plays out slightly differently. But we expect that going forward, with a steady demand being there, and if the raw material prices were to be also holding to the levels that they have come to, I think, yes, the margins should be getting better. But by how much and to what level is something that we will have to wait and watch.
Now, your Mexico business has done well, and when we compare the kind of growth that we've seen in percentage terms, and an outperformance has been seen in the India business, what is the replacement demand growth outlook for your international markets?
See, on the export market, the exports that we do out of India, Q4 was a little subdued. We have seen that there are certain headwinds in the global economic scenario. We expect that this should start easing out in this financial year. Maybe not in Q1 completely, but from Q2 or definitely from the second half of the financial year, we should see the normalization in the demand in the export markets. When we talk about export markets, the ones that we are getting to are the markets in North America, including US, Mexico. We also have reasonable exports into markets of LATAM, Middle East. We are working on certain markets in Africa. So overall, we see that these markets, the demand should be coming back, especially the emerging economies. We expect that the GDP growth should be upwards of 4%. So overall, I think so there should be a recovery into the exports market.
Right. So update us on your capex plans as well. In FY24, what all capacities are expected to come on board?
So, as we had already shared with all of the people, one of the expansion programs is in the area of the passenger car radial, which is having an outlay of close to 530 crores. This would be adding a capacity of 1.6 million units. That is also being kind of pursued actively, and it should be start giving the output. There will be a ramp up, but we should expect that it should start playing out in the second half of the current financial year. The other program that has also been announced is in the truck and bus radial. That has an outlay of around 260 crores. So both put together is close to 800 crores. So this would also help increase our overall capacity in the truck and bus radial by around 10%. So this again should start ramping up from the start of the second half of the financial year and should go into full output by the end of the financial year.
Now, historically, capacity utilization for the Cavendish subsidiary has been lower than that of JK Tyre on a consolidated basis. Is it at par now?
Yeah, in fact, for the Cavendish Industries, which is a subsidiary, the quarter four has been quite a good quarter. In fact, there the capacity utilizations have been better, especially in the truck and bus radial and also in the 2-3-wheeler. As you know that the 2-3-wheeler tires are manufactured only in the Cavendish Industries. So there again, we were at a very high level of capacity utilization. This was an outcome based on the demand coming in from the replacement market and also from the OEMs, where we have secured further business. And we hope that this level of capacity utilization will continue. As far as the TBR segment is concerned, we were in excess of 95% capacity utilization in Cavendish, and this plant mainly caters to the replacement market. So there again, the overall demand is quite robust, and we expect that this demand will continue. In fact, the expansion of capacity that I spoke about in the TBR segment is being pursued at the Cavendish plant itself.
So could you update us on your current debt levels you're holding on your books, and what are the plans then to repay that? And what exactly is the target for repayment as well for the fiscal?
So if you see that at the beginning of the last financial year, we were close to a debt of 4,900 crores, which has been now reduced to a level of 4,500 crores. And going forward, we expect that we will be able to take off another a similar amount in the current financial year. And thereby we will be able to come to a level of somewhere in the range of the 4,000 crores.
All right, good to have you on board. Thank you so much for taking time out and joining in. That's the view from the management of JK Tyres. Raw material prices will remain stable, and they are saying that it's tough to guide on margins as of now due to the raw material price volatility. And that's the stock price of JK Tyres, currently down in trade at about 190. But the rest